Crack on, because we're, as I said, on this very tight schedule. Don't worry if you didn't get a chance to ask questions. Use the Slido to submit questions, but also aim to join the roundtables where a lot of these speakers are going to be joining as well, so you get a chance there. Cracking on with the next panel. Well, it's not a panel, actually, it's a keynote. We're very fortunate to have Ronit Ghose join us. He's from the Future of Money and Emerging Technology teams at Citi, Future of Finance team. Now, Ronit is on the advisory board of Imperial College Center for Financial Technology. But if you see him afterwards, you can ask him different questions, because he's just told me that in the last 2 days, he has been to every one of Indian's Michelin-starred Indian restaurants. So you can ask him for his tips. Please welcome on stage Ronit Ghose.
Not quite every single one, but pretty close, pretty close. I'm not going to eat today. Thank you, Edenbase, for inviting me to speak. I'm going to be talking over the next 20 minutes about what is money and how is money changing. I'm based in Dubai. This is what a banknote looks like in the UAE. I rarely have one of these in my wallet. Once in a while, I have a banknote in my wallet. But let's start with banknotes, because in a way, they are the original tokens. I'm sure some of you in the room will know the history of banknotes in the UK. Goldsmiths in the 1500s, 1600s would receive precious metals, gold and others, and they would give out receipts, invoice slips, which became the first tradable instrument, aka a banknote. But like with most things when it comes to money, the UK was about 800 years behind. China came up with the idea of banknotes around the 800s. And along the Silk Road and other trading routes, you would have, again, merchants who'd say, gosh, I don't want to carry a bag of bronze coins up and down, whatever Silk Road I'm on. I'm going to deposit it with a merchant I trust, and they will give me an invoice, a negotiable instrument, and that became banknotes. Fast forward a few hundred years, the rulers of China, the Chinese, and then the Mongols, they're like, this is a really neat idea. I'm the state, I should control it. You can still issue your banknotes, the merchants, but I will regulate it. And this is the start of like the public-private partnership, which is what money is all about. Money today, large parts, most of money today, most of credit today, most of money today is private money. It's what banks issue. When you deposit, when you take a loan, we create money. But the start of fiat money dates from the late 1200s in China. Again, some of you will be familiar with the story. One of the great Khans, I think it was Kublai Khan, but you can fact check me and correct me later if I'm wrong. One of the great Khans was like, I need to do another invasion. Oh, money is always politics. So these pesky Japanese refuse to be conquered. I'm going to invade Japan, but I need money for that. Why do we need to have gold or bronze to issue banknotes? I'm just going to issue them. I'm just going to issue them. Like this note here, that's linked to the dollar, but the dollar today is just, it's fiat. What is fiat? It's basically, I say this has value. I'm just going to issue it. And if you don't accept it, you're breaking the law. That's what fiat money is. That's how it's different to cryptocurrencies or gift vouchers or something like that. You're breaking the law. Of course, in late 1200s China, law was somewhat more brutal. So Kublai Khan said, if you don't accept this piece of paper with my name on it, with my face on it, I will kill you. Pure, raw, brutal power. I will kill you. So guess what? Compliance is pretty high when you've got that kind of trade-off. Still up there, good. Now, when I look at where money is going to go to, or is going to, we'll talk a little bit later about blockchain technology and tokens. Effectively, tokens are a bearer instrument, and this is what we're talking about. This is how it starts. This is how the story starts. Oh yeah, there's another thing I should add in. Why did the Chinese, and I'm sure as an educated audience, you will know this, why did the Chinese invent paper money? Because they invented printing, right? So technology is core to money. In fact, if you go to the Bank of England courtyard, there are a couple of trees there because the first money was printed on the bark of, you basically literally, I mean, money literally grew on trees. you take the bark of trees, and that's how the banknote started. Now, I think in the previous panel, I overheard some discussion about AI. I put this slide up because that's when both my wife and I were pretty slim, much slimmer than I am now. That is a picture, believe it or not, from 24 years ago when I got married in London. And I put it up because I want to talk about how money gets changed by AI. And I also want to show off that I used to be very slim many years ago. But imagine you are redoing your wedding, hopefully to the same spouse as before, or for your children's wedding. Question for the audience, and it's going to be hard because it's kind of, big room, but would you have for the cake, a human chef or an AI-powered robot trained on the world's best chefs? Would you have a human chef to make that cake? It's a special occasion. It's your wedding, and hopefully it's only going to happen once or maybe twice, okay? It's a special occasion. Would you have a human chef, anyone you can choose, someone you trust, someone you know, someone who's reputable, or would you go for a robot, AI-powered robot? Hands up for human chef. Who would have a human chef? Human chef. And who would have the AI-powered robot? Ooh, I think the human chef won, but it was kind of close. Normally, when I do this question, I ask for why would you have the human chef, but I can't do this in this. It doesn't really work, that question. But when most people who say, I want the human chef, like I asked my wife this question, she goes, well, I trust the chef. The chef can taste it, the food. There'll be a feedback loop, but the word trust keeps coming back, feedback loop. Another person said to me, I know who to blame. He was a banker, so, I know who to blame. And that's important because AI in financial services, we can all talk about it, and I'll talk about in a second how we're using it at Citi and how other big banks are using it and how fintechs are using it. But crucial, when we use AI or any kind of machine learning model, it doesn't have to be Gen AI, it's explainability. We need to be able to explain how we got to the decision. How do we get to that credit decision? Why did we agree to lend Ronit 5 times more than Alex, who's married to him, and they have a shared household? That's actually happened, right? Not to me, but it's happened in the US. And when you make that decision, the regulator and the public want a neck to wring. This is how basically financial services, most things work in regulation. They want to have a CEO up on stage in Capitol Hill to say, what did you do? Why did you do this? And so explainability is a key part of the challenge we have when we use AI models. But trust is the big one because, yeah, models are 95%, 85%, 92% correct, whatever the number is. They are not 100% correct. And let's just keep that in mind. We've been talking about blockchain and how blockchain is going to change financial services, it feels like, for years. And there are many skeptics when it comes to digital asset technology or blockchain technology in financial services. It's a slow database. I've been pitched this by consultants for 15 years. When is it ever going to deliver? We think we're at a tipping point or an inflection point, particularly in the enterprise world, in the FI world, of the adoption of blockchain technology. You just have to Google this, or search engine of your choice, whatever it is you use. We recently announced a couple of weeks ago at Sibos, sort of big trade fair for transaction bankers, a product called Citi Token Services. You as a client, you don't need to hold cryptocurrencies or even a wallet. But behind the scenes, we as a bank will provide you 24/7 rails, to get your payment done. You're a corporate treasurer. You're sitting in New Jersey. You want to move money from your Singapore subsidiary. In the traditional world, at cut-off hours, there are times when you can't move money. What we can do now, and other banks as well, is move it 24/7. Now you could say, hang on, Ronald, why didn't you do it anyways? Why wasn't 24/7 working? That's the world we live in. We didn't have 24/7 because the existing payment rails, largely built between the 1960s and 1990s, didn't handle 24/7. By putting a blockchain rail in the back, we're not going to replace the existing fiat rail because there are certain things for which the fiat rails still work really, really well. We're simply complementing, providing another. There's a massive railway station here, right? Just across the road. I think about it in the same way, like in transport in the UK or in France, we have motorways and autoroutes and highways and trains and trams. There are many ways to move around people. It'll be the same for money. There'll be many ways. So we think that even though it's been 15 years since, well, just a couple of days ago, Halloween, 15 years since the Bitcoin white paper, we're finally beginning to see enterprise adoption of blockchain technology. And the major thing that changed, and thank you, Mark Zuckerberg, for this, was Libra, or DM. Recently, the outgoing Deputy Governor of the Bank of England talked about Libra DM being as a kind of black ships moment. I don't know why we're going on about Japan and invading Japan, but that's when the American ships arrived in Japan. And he said that's when Western policymakers were like, whoa, if we don't start embracing blockchain technology, others will, i.e. companies that are huge that we don't control, like we control the banks or regulate the banks. Big tech will do us. And so the regulators are crucial because you have policymakers, oftentimes deeply skeptical of cryptocurrencies, who are embracing some element of blockchain technology, sometimes private permission chains, but they're embracing some element of blockchain technology in so-called CBDC, central bank digital currencies. Once the regulators do it, everyone else follows. Okay, this is an unflattering picture of me a couple of weeks ago. Actually, this was last week in Hong Kong, playing with a headset. And we're kind of embarrassed to talk about the metaverse now, many of us who were writing about it 2-3 years ago, because it got overhyped. But we believe that in the next 12 to 18 months, when I say we, I mean my research team at Citi, we believe that we're going to go back to, and let's call it extended reality or XR, this is coming back. And it's coming back because consumer devices, so I don't know if any of you have the Ray-Bans, the Meta glasses already. Those are pretty cool. They're pretty user-friendly. I remember walking around Rome a couple of years ago after COVID for my first time thinking, wouldn't it be great if I had an art history professor talking into as I'm walking around Rome at night? I can now do that, hopefully in a couple of months' time when they do the next software upgrade for those glasses. And then we'll also have the launch of the Apple Pro, Vision Pro. So when it comes to anything to do with communication, training, onboarding, etc., we're going to go back to XR. Now let's pull this all together. Let's pull all the threads together. These are some of the big trends that's going to shape money in the next 3, 5, 7 years. And obviously AI is the big one. Yeah, goes without saying. That's obvious. What can it help us do? Scale. We can scale innovation way faster. But productivity, that's the crucial bit. And that's also the big socio-political question, right? I think Elon Musk a couple of days ago said, oh, we don't have jobs anymore. I mean, he might be right, but I don't know when that's going to happen. And as one of my friends said, eventually the sun will stop burning as well. So it's not good enough just to say, eventually the sun's going to stop burning. When will these jobs change? And we think basic tasks, basic roles in financial services or in any field are going to dramatically change. And smaller companies, be they fintechs or others, are going to have an advantage here over larger companies. Because larger companies, in terms of adoption, will take longer. So what's going to change? Many years ago, when I started out as a financial analyst, one of the things we had to do was we'd read reports, right? Prospectuses, earnings releases, and then we'd have to digest it, summarize it, communicate that to clients, to investors, to our sales force. couple of 100-page document, that takes a whole day to read, at least. Even a 30-page earnings release will take a couple of hours to read properly. Put that into some kind of write-up to digest it, into a PowerPoint. You know where I'm going, right? It would have taken me as a junior analyst probably half or 3/4 of my day to summarize, to digest, to analyze. And if any of you have seen Copilot in action, that can be done in a couple of minutes. And that role or that task, it's a really good example of, in professional services, which is most white-collar jobs, we spend most of our lives. I mean, if my 9-year-old saw me working, which he sometimes does when I'm working from home, he'd be like, Dad, all you do is, you do email. Like, did you really go to university to do email? I mean, that's what we do, right? We process emails, we process information, then we're like, oh, I need this information. And we're basically information processing, analyzing, summarizing machines in most white-collar jobs. Oh, I missed that presentation. What did Ronit say? Well, someone can now summarize this for us. And it can be done in minutes, and with a high degree of accuracy. It's not perfect. So there will be lots of tasks. So productivity, we believe, on certain roles are going to, particularly in software developer roles, so not all coding languages, because many of you will be familiar, particularly some of the older languages that drive the bank technology stacks. Those the models still aren't very good at, but yeah, for example, Python rather than COBOL. Python can be, yeah. Most of the basic coding in the next couple of years in large organizations will be done by Gen AI. Well, there'll be a checker above the maker. That'll probably be human for a long time. But a lot of that basic role. So think about what's happened in white-collar jobs. So about 20, 30 years ago, McKinsey and others came to us and said, why are juniors sitting in London or New York? Let's move them to Dublin or Bangalore or Buffalo, right? That's where, and suddenly all our younger staff disappeared. We did that 20, 30 years ago in most white-collar jobs. Call centers were the same. The next natural step is a lot of those roles, having been outsourced or offshored, will go on to AI. Blockchain I've talked about already, that we're at the enterprise level adopting it. And obviously, the analogy with banknotes is slightly superficial, but it is the same idea of I have a bearer asset, I have privacy, but then on top of that, I have programmability, and that's crucial. And with that tokenized cash solution we talked about earlier, Citi Token Services, we've also got a tokenized trade solution we're rolling out in pilot in the Panama Canal, where most trade is financed by Citi. And as the ships go through different parts of the journey, we can program. It hits this part, this port, this action happens, this token can be dispersed. And metaverse, we're going to be living in a spatial world. And it's coming. And I know it's a bit of a, in 2023, dirty word, but if this conference happens again in 24, let's do it. Let's talk about how metaverse took off or XR took off in 2024. I've run out of time. A lot of what I've talked about is available publicly online. You can Google this. Money tokens and games, one of our last reports. There are many of these reports. These are all publicly available. They don't sit behind paywalls. Just put in future of money, future of finance, and Citi. If you don't put in Citi, you'll probably get a McKinsey or BCG report, or Goldman Sachs. So put in Citi, you'll get my reports, future of money, future of finance. And if you're interested in some of the content I've been talking about in long form, can I make a plug for my book? Coming out in March, so you can look on Amazon.co, Future Money. So please pre-order it. Thank you for coming.
Amazing. Much appreciated.
Thank you.
Thank you.